Ladies and gentlemen, welcome to lesson 1. I am your host, I am your coach, Joshua Salvetti, and today we are going to be breaking down candlestick charts and chart patterns. Basically, what they do to us, what they tell us, right? Why we use them, and how they work. So some benefits of knowing and understanding candlestick charts and chart patterns, right? What we're going to learn from this lesson is confidently how to understand them and why we use them. We're going to learn what makes a chart pattern simple, unique, and important. We're going to learn how to spot a high probability market reversal, which is super vital to your success in making money in the stock market. We are going to run through the candlestick's physique, right? What the 4 price points are. And we are going to look at some multiple chart patterns that qualify what a high quality setup is. So basically, what is a candlestick chart? Okay, it is a visual format used to measure and analyze the price and data points of an underlying asset's auction, right? The supply and demand. Basically, it is what the market story is. It's how it speaks to us. You're going to hear me say this a bunch of times, whether it's on the Discord or in any of my videos, guys. We do not predict the market. What we do is react to the information that the market gives us, right? And how the market gives us that information is through candlestick charts and chart patterns, right? So we use this to determine possible price movements based on past patterns. So where do they come from, right? Well, a candlestick, right, comes from the 1700s, a Japanese rice merchant by the name of Mohisha Hama, right? And what he came up with was one candle, 4 price points, right? Which is high, low, open, close. So basically how it works, you can see in this example here, is price opens up in a candlestick's based on a specific time frame that we pick, right? So it comes in, it opens, let's just say at $100. It drops down to $95, rips up to $105, and closes here at 102. So it's basically a visual format of price action. Oh, and there's 3 different types of candlesticks, right? There's a bullish candlestick, which indicates price is moving up and headed higher. There's a bearish candlestick, which means price is heading down and moving lower. And then there's a indecision candlestick, right? Which plays a huge part in reversals, where the forces of supply and demand and buyers and sellers actually are agreeing on a price. It kind of looks like a cross, right? And it's a real balanced indicator. So a candlestick reversal, right? So what it is, how to see it, how to spot it. So a candlestick reversal is a formation of candlesticks indicating the end of an existing trend, right? So basically, while price is in a level of interest, we look for a volume spike with a hammer candlestick telling us who has taken control of the price, right? Who is capturing the supplier demand imbalance. And as you could see in this example here, and we're going to dive into price and volume analysis in lesson 3, so don't worry if you don't understand this. I just wanted to kind of give you a visual. So here we have a demand zone, right, which is at 282. And how that works is, and how I want you to see it, is that there is a big passive buyer here at $282 a share. And so as buyers lift the price up to 284, sellers come in and drop it all the way to 282. And then there's a volume spike, right? Where on average, we're trading on the QQQ per minute, 350,000 shares a minute. But in this candlestick, you can see there's over 1 million shares being bought and sold. Heavy volume, heavy rejection from the demand zone. And then price continues to rip up into supply. So what we're doing is capturing the market imbalance. How we see that and how we react to that is by understanding what the candlestick's telling us. And what the candlestick's telling us right here is that it ripped down to 282, buyers gobbled that up, right? So the way I want you to look at it is 1 million shares were being bought here at 282, which instantaneously made the price of the underlying asset go through the roof. So now that we understand candlesticks a little more, now we're going to jump into chart patterns. So what's a chart pattern? It's a graphical presentation of price movement, right? The way I like to use chart patterns is a high probability price movement. So every time you see a chart pattern, there is a high probability of price to move. Now, what does probabilities mean? Now, don't worry if you don't understand that. We got another lesson coming up, but basically it means out of a bunch of times you can expect a certain amount of probable causes to happen. In this case, out of a bunch of times when we see chart patterns, you can expect price to change in a probable cause. So what we use chart patterns for is to identify high quality setups and high probability market reversals. And you're going to hear me say that over and over, but guys, understanding high probability market reversals is how you become successful. It's how you become a trader, a successful, consistent, profitable trader, is understanding how these markets reverse and how to capture them in a probable way. So the next couple slides are just, I want to run you through some of my favorite chart patterns, right? The ones that I use daily. And all these slides I've picked out from my own personal trades. Really authentic. I see them, I live them, and I want to show them to you. So double bottom. This is when price here at 375 comes down. And you can see pre-market data, which is over here on the left. It looks like in the beginning of the day, we had buyers come in around 375.50, brought the price up to around 379, sells off once, right into 375.50. Price gets rejected, met with buyers, and then sellers come in trying to bring that price back down to 370.50, met again with a large passive buyer, price starts to rip. Extremely bullish chart pattern, the double bottom. Next is the bull flag, otherwise known as the ABCD, right? So basically the way I want you to look at this is price rips, retraces around 20 to 50%, consolidates, and then bursts out, and we'll talk about technicals in lesson 2, but basically price rips, retraces, and then rips again, right? Bull flag, very bullish scenario. Next is the inverse head and shoulders. So a really cool pattern. I really love it because it's easy to spot and see. So basically is when price will consolidate and look like a left shoulder, then come down lower, look like a head, and then come up, consolidate around the same exact price as the left shoulder, which is 394, and then buyers come in and price rips, right? Very bullish scenario. Next is the double top drop. Guys, this was my favorite chart pattern in this market. Obviously, we've been in a pretty bearish market, so the double top drop has worked phenomenal. How it works is you find a certain price, right? Price rips up into 390. And once again, guys, buyers I want you to look at this as an auction. If you could understand the market as an auction, you will have such a powerful edge as a trader. And what I mean by that is you need to understand this is all a buy and sell process. Buyers and sellers is the only thing that moves the market, nothing else. So when you start to look at chart patterns, I need you to understand that it's buyers being met by a big seller or sellers being met with a big buyer causing a market reversal. And now what that is a chart pattern. So the double top drop, price rips up here from 380, rips all the way up to 390, where we're met with a seller, a prior past pattern, right? Prior past price movement. And then, so at 390, we're met with a seller, drops off throughout pre-market, consolidates through the next day, opens up at 390, where price tanks. Sellers come in heavy, capture a $6 move to the bottom, all based on a double top drop, right? Love it. Next is the head and shoulders, which is basically a left shoulder, right? And then buyers bring price up to cause the head, and then consolidates, right shoulder, and you notice I got a line here right at 14,209. It's exactly met and rejected as the left shoulder. The right shoulder becomes extremely bearish, and then she comes down. And here I got some more chart patterns and examples, right? That guys, don't worry if you don't understand them at the end of this slideshow, right? But what I need you to do is go on TOS, go on Thinkorswim, guys. This is your homework. Start looking for these chart patterns, right? And in lesson 2 and 3, when we break down technicals and price and volume analysis, we are going to break down how to see these in real time, right? How to act on them, how to make entries, and then when we break into the process development lesson and how we break down a trade, guys. So don't worry if you don't catch this right off the rip, but I need you to do your homework because I can only bring you as far as I can. I need you to show up, put the work in, figure these out, learn to see these. Double bottom, double top, bull flag, right? So I know people get really, let's just say, intimidated, right? In the beginning, they're like, how am I going to understand all these patterns? Price is flying, it's coming, it's going, right? Supply and demand. Now he's talking price and volume analysis. Listen, we are going to keep this extremely simple. When you see a pattern, that is a clear indicator to take the price long or to short it, right? When you see a certain chart pattern like a bull flag or a bear flag, that's a continuation, right? We are going to simplify this, right? We are going to keep this simple, unique, and comfortable, okay? Because that's the only way to become a extremely successful trader. So don't worry about it. We're going to be talking about it in the Discord. We're going to be breaking down videos every single day. We're going to do weekly podcasts, guys. The community will make sure you understand it. So some benefits we learned from this PowerPoint, right? And how to understand candlesticks and chart patterns. So we can confidently identify now a high probability price movement using chart patterns, right? We now more understand the market language, right? The market auction. And most important, now we can spot market reversals and continuations. So now we're going to jump into some live video and of live charts on TOS where I'm going to run you through some more examples, right? Some more trades, and we're going to get you there. To run through some charts and look at a candlestick, how it looks on TOS, just get you a little more familiar in what to look for as a trader, and to look at what the market's telling you, how it's telling it to you, how to capitalize on it, stuff like that. So we're breaking down candlesticks. Basically, guys, the main thing you have to understand is a candlestick has 4 different price points, which are open, close, high, low. Now you can get all this information on TOS right up here on the top, right? I'm gonna pull up the SPY real quick. So as you're looking at the market and as you're looking at charts, if you put your cursor over a candle, you can see up here in the top left, right, where it'll say the time, the date, it'll say the open, the high, the low, the close, even the range, right? And the range is very powerful stuff. Basically what a range is the range of price, right? So right here on this candlestick, we got a range of $3.22. There's actually a really cool indicator called the ATR, which is the average true range, which is basically the range, the average true range of the commodity over a specific amount of time. So candlesticks is your main way to measure price. And what it's used for is to see possible patterns, price patterns that give you clear indicators to get in and out of trades. So I just kind of want to run you through what I did yesterday. So, and up here, right on TOS, this is where you go in and pick the how long. But basically, yesterday had a phenomenal, had a great trade, great opportunity. So in the prior presentation, we were talking about a double top, right? We were talking about double bottoms. We were talking about inverse head and shoulders, stuff like that. So this is a clear triple top pattern, right? Where price rips up into 398. Here's that indecision candle I was telling you about. And guys, these candles come in constantly, and they're clear indicators that price is about to make a reversal. So price rips up into 398, almost 399, gets met with sellers, and then goes to make the double top and can't quite touch it, right? Clear indicator that sellers are coming in, brings the price down. Here's another one of those indecision candles, right? Where the open at 397.74 drops, right, to low, 397.57, rips back up and closes in 1 minute. You can see the volume bar is white as well. in 1 minute at exactly where the open happened, right? Clear indicator that a clear reversal, right? So I need you to look at these candlesticks as if the market is screaming at you going, hey, I'm about to change my price. I'm about to change my movement. So especially when you come down, and we'll break down zones and levels in lesson 3, but clear zone right here, right? Now this is a double bottom. I think I actually grabbed this example for the presentation. But so right here around price, I'm just gonna draw a rectangle. Price around 394, we touch this once, twice, 3, 4 times, right? So sellers bring the price down to 394. It gets met with buyers. Then sellers bring it back down to 394. It gets met with buyers. Then sellers bring it back down to 394. It happens 4 times. Extremely bullish scenario. So while you're trading, you will be able to realize and see these in live time, right? Hey, price is testing 394 4 different times. We can't get under it. Clear indicator that a reversal's heading, or a reversal's coming. So that's a double bottom. And we see these patterns all over, guys. It's just non-stop. And you're going to get very good at noticing them, right? So we got a double top right here, which is what I like to call a supply zone, right? And you'll get very good at being able to notice these and see these. But so price, we have a sell-off, right? So in the presentation, I was talking about a prior price movement. Very important to be able to spot a reversal is to understand the prior price movement. What I mean by that is prior, right, which is past tense, at 398, last time price was at 398, we sold off. A prior price movement. So what makes this useful? So last time price was at 398, we sold off. That means there is a high probability, not a guarantee, not 100%, but a high probability that next time price meets 398, we are going to sell off, right? Really cool concept I need you to grasp. Prior price movements, right? That helps big with patterns. Prior price patterns, right? That's how we spot big time reversals. Is what did price do last time it was at this price? I'll find another example. But that's basically how double tops, double bottoms, bull flags, bear flags, that's how it all happens. So we actually use this for the presentation, and I want to dive into it because I remember this day like it was yesterday, and it was a phenomenal day, phenomenal trade. So here we have a double bottom, or a double top, excuse me, where there are sellers here at 390.48. Isn't that weird? Look at that. So at 390.48, the prior price movement was last time we met 390, we sold off. So there's a high probability that the next time we hit 390.48, we are going to sell off. Exactly what happened. Now, you're going to hear a lot of coaches, a lot of traders out there talking that they have this magical indicator, or they could pick the hottest stock and crush it every time. So what makes us very unique and simple is that we usually, and when I say we, I'm talking about the high performance trader community, we usually and only trade the SPY or the QQQ. What that does is simplify this process, right? I know traders that they run through, they got 800 charts up, they got Apple, Tesla, Neo, and millions, right? Intel, Microsoft, right? And they're looking at them all, which is great, right? And I truly believe and preach to align the stars of market context, and we'll break that down in another lesson. But I usually keep my eye on about 2 stocks, the QQQ and the S&P 500. Why? Because your brain only has so much mental capital or mental capacity. So I don't want to waste that on confusing myself with looking at a million different indicators or a million different stocks, right? And if that works for you, that's great. But I promise you, what works for me and what works great is focusing on 2, maybe 3 stocks, right? And I'll throw Tesla in there, other big market leading equities. But other than that, that's it. I do not like to confuse myself. I do not like to have a million different companies in my brain and affecting my decision-making process. And there's nothing wrong if you want to be the same way. I highly advise that you're the same way because it helps you make so much better decisions, especially in the moment. Trading's a very in the moment zone sort of environment where you need to be able to spot things in live time without having your judgment clouded, right? A very good book I'm reading right now is called Trading in the Zone. I highly advise a lot of you guys to go get it. Basically, it breaks down market psychology, right? And we're going to be breaking down market psychology, and pretty much every example or every lesson I have has something to do with market psychology because I truly believe it is insanely important and super vital to your success, right? And my goal is to bring you exactly where you need to be so that you can spot reversals, so that you can get in and out of trades super simple, super easy, so that you could stay trading in the zone and make high quality setups, big profits off spotting high quality trades, right? And that is my goal, and I'm here to bring you there. So that pretty much wraps it up for lesson number 1, candlestick charts and chart patterns. Email me, DM me, contact me on the Discord or Instagram, guys, where if you have any more questions, I will run you through it. Next is lesson number 2, which is technical analysis. I'll see you there.